Bitcoin is trading below the 200-week EMA. The weekly RSI is oversold, and whether you're feeling confident, uncertain, or somewhere in between, this is one of those moments where structure matters more than emotion. In this update, we'll break down what the chart is actually telling us, how macro conditions are influencing price, and what that realistically means for the next 7 days. Because understanding the environment is what allows you to make better decisions, not louder ones. So let's slow this down properly. On the weekly time frame, the 200-week EMA is one of the most respected structural levels Bitcoin has ever had. Across multiple cycles, it has acted as a long-term equilibrium zone, a place where excess gets reset and patience gets tested. In previous bear phases, 2015, 2018, 2022, price eventually revisited or briefly broke below this level before forming meaningful long-term bottoms. And now, once again, we are trading beneath it. From a technical standpoint, that is weakness. There's no need to dress it up. Price below the 200-week EMA signals that the prior bullish momentum has clearly cooled off. We've seen lower highs form, we've seen distribution at elevated levels, and we've seen a decisive move lower. But weakness and opportunity are not mutually exclusive. Now let's add the second component, the weekly RSI. The RSI has entered oversold territory. That tells us momentum has reached an extreme on a higher time frame. And higher time frame extremes tend to matter more than daily noise. Oversold does not mean price must immediately reverse. Markets can remain oversold longer than most expect. Another leg lower would not be shocking. But historically speaking, when Bitcoin traded below the 200-week EMA while the weekly RSI was oversold, those zones have justified spot accumulation for long-term participants. Not because they perfectly marked the bottom, but because they offered favorable asymmetry over a multi-year horizon. That distinction is important. If you are trading short-term, there is no confirmed reversal here, no higher high, no structural breakout. Momentum remains fragile, but if you are allocating capital with a long-term view, historically, this has been the type of environment where disciplined spot buying had a rational foundation, not aggressive, not emotional, but systematic. Bottoms form in zones, not in single candles. And right now, structurally, we are in one of those zones that deserves more than panic. It deserves measured evaluation. Bitcoin markets have not been moving in isolation this week. Broader macro forces and headline developments continue to shape sentiment across risk assets. And yeah, that includes crypto. One of the dominant stories this week has been escalating geopolitical tensions in the Middle East. Conflict-related developments have pushed energy prices higher, with oil markets reacting pretty sharply to supply fears and regional instability. That, in turn, has put pressure on equity markets and increased risk aversion across global capital flows. A backdrop that typically weighs on assets perceived as risky, Bitcoin included. We've seen knee-jerk reactions to headlines, short-term volatility, rapid shifts in sentiment, but what we have not seen is structural collapse. Bitcoin experienced pressure during periods of heightened geopolitical stress, yet it stabilized rather than unraveled. That distinction matters. Markets that are about to break tend to accelerate downward with disorder. What we are seeing instead is reactive movement, not systemic liquidation. Institutional flows also remain relevant. Spot Bitcoin ETFs continue to see participation, and strategic buyers have not disappeared. That doesn't mean aggressive inflows, but it does mean there is underlying demand willing to engage at discounted levels. From a macro perspective, interest rate expectations and dollar strength remain key variables. Higher for longer narratives continue to influence global liquidity conditions. Risk assets are sensitive to that environment, but macro headwinds do not automatically invalidate long-term structural demand. In fact, periods of uncertainty often reset leverage and excess positioning, which can lay the groundwork for more sustainable moves later. So the macro backdrop right now creates volatility. Yes, but it does not automatically create structural failure. Now let's talk about the next 7 days. These aren't predictions, just, scenarios. At this moment, we're sitting below the 200-week EMA with an oversold weekly RSI, coming off geopolitical tension and, well, broader macro uncertainty. First, the bullish scenario. If Bitcoin manages to reclaim the 200-week EMA and hold above it on a weekly basis, that would be structurally meaningful. A decisive close back above that level would suggest that the breakdown was more of a deviation than the start of prolonged structural weakness. In that case, short-term sellers could find themselves pressured, potentially fueling a relief rally. Combine that with oversold weekly momentum and even a modest stabilization in macro conditions, and a move back toward recent lower highs becomes plausible. Not new all-time highs next week, but, recovery. Second, the bearish scenario. If macro stress intensifies, equities weaken further, or liquidity conditions tighten, Bitcoin could remain under pressure. Failure to reclaim the 200-week EMA, combined with expanding downside momentum, could open the door for another leg lower as the market seeks liquidity beneath recent lows. Oversold can stay oversold in the short term. That must be respected. Now, the base case. Given current structure, stretched momentum, and the absence of disorderly panic, the more probable near-term scenario appears to be volatility combined with compression rather than collapse. In practical terms, that could mean attempts to reclaim the 200-week EMA, potential rejection, continued range building, and reactive price action while the market digests macro developments. For long-term participants, the critical question is not whether next week prints green or red. The question is whether the current zone offers improved long-term asymmetry compared to buying strength during euphoric conditions. Historically, when Bitcoin traded below the 200-week EMA with an oversold weekly RSI, systematic spot accumulation had a rational foundation. Not guaranteed upside, but improved positioning. The key level to watch remains clear sustained acceptance far below the 200-week EMA without signs of reclaim would signal deeper structural weakness. As of now, we're not there. We are at a test. And, tests are where disciplined investors tend to act quietly while emotions run loud. Whatever the market decides to do next week, we'll look at it the same way, calmly, structurally, without emotion. If price reclaims strength, we'll analyze it. If volatility expands, we'll break it down. If nothing happens, we'll still extract meaning from it. That's the game. If you value clear thinking over noise, make sure you're subscribed so you don't miss next week's update. And if this helped you zoom out instead of react, leave a like. I'll see you in 7 days.